And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off now with the markets. We'll see oil prices inched up in early trade today after falling around 8% last week. More than 3 weeks lows as jitters about major economies outweighed signs of a demand recovery in China, the world's top oil importer. Brent crude futures that crawled about 16 cents to $80.10 a barrel, while U.S. WTI crude futures that rose 15 cents, was about 0.2% higher to $73.54 a barrel. WTI and Brent slid 3% last week on strong U.S. jobs data. Raised concerns that the Federal Reserve would keep raising interest rates, which in turn boosted the dollar. While recession fears dominated the market last week, on Sunday, International Energy Agency Executive Director Fatih Birol highlighted that China's recovery remains a key driver for oil prices. We'll keep tracking, see how prices react in that market. Let's move on to the global grains market now. Chicago's soybean futures inch lower today, weighed down by estimates of a record output in top exporter Brazil, despite slow harvest progress due to heavy rains in key producing regions. Wheat edged higher according to an agriculture consultancy, cut its harvest forecast for top exporter Russia, while corn was largely unchanged. Most active soybean contract on Chicago Board of Trade, SB1, that was down about 0.1% to $15.30 for half a bushel, which WV1 gained 0.6% to $7.61 for half a bushel, and corn CV1 gave up about 0.04%. Keep tracking to see how these markets play out this week. And it's about 4 days to the deadline extension, February 10th, for you to exchange your old notes for the new ones. And obviously, you can always still send us your experiences if you're able to get it, and how easy it is for you. Just send us an email at businessmorning@channelstv.com, and we'll share your experiences with other people. The deadline still stands right now, 10th of February. Meanwhile, the governor of Central Bank of Nigeria has appealed to Nigerians to show understanding, adding that the redesigned notes will be in circulation and accessible to everyone. He made the appeal at the CBN office in Lagos over the weekend. Let's listen to the governor now.
At our last meeting held this morning, the CEOs of the banks reported that although calm was beginning to return to their banking halls, there were still some areas of pressure, and everything is being done to divert more resources to such pressure points in order to ease the tension. The meeting further resolved to extend the cash swap initiative nationwide and expand the number of participating agents, as well as formally include some of our microfinance banks in the cash swap initiative. We deployed 30,000 super agents nationwide to assist in our cash swap initiative in the hinterlands, our rural areas, and regions underserved by banks in the country to ensure that the weak and vulnerable ones amongst us can swap or exchange their old notes. The CBN welcomed the participation of the EFCC and the ICPC, who also joined our monitoring teams nationwide, and this has further enhanced compliance at bank branches and agent locations. We are happy that so far, the exercise has achieved a success rate of over 80%, as about 2.7 trillion naira held outside the banking system has been returned. Nigerians in our rural areas, villages, the aged and vulnerable have had the opportunity to swap old notes, leveraging the Agent Naira Swap initiative, as well as CBN senior staff nationwide sensitization team exercise. Is CBN open to further extension of deadline? I would say no. I'm sure that people are going to say, well, only last Tuesday I said no. But I want to say, unfortunately again, this time we will not be looking at extension of deadlines, because we are the central bank, the deposit money banks, and other very important stakeholders, we are looking at areas where there is pressure. And we are doing everything possible to address those areas of pressure. And I mean, we've had cases where in some areas, some bank branches had some cash in their vaults because there was no demand for them. We've asked central bank officials, when reported, they move those monies away from those locations and move them to areas where there is pressure. So those are some of the logistical challenges that we face, and we're doing everything possible to address it. So I am not going to make any promise to anyone that that there will be any further extension of this deadline.
And Governor there telling us there won't be any other extension after the February 10th. We'll be watching out, for all of that. But for our first conversation now, with the signing of the 2023 budget of 21.83 trillion, along with the 2022 supplementary appropriation bill into law, the aggregate expenditures of 21.83 trillion is an increase of 1.32 trillion over the initial executive proposal. For a total expenditure of 20.51 trillion naira. How effective will this budget be in determining the growth forecast of the Nigerian economy? Let's talk to Mr. Roman Osayele now, business and economic intelligence analyst and the head consultant at IntelServe Inc. Join us right here in the studio. Great to have you. Good morning.
Good morning. Thank you for having me.
So looking at this budget now, and let's take it back, maybe 5 years. Let's throw it back to about 5 years. Looking at this budget, are we seeing any improvement?
Well, I think the first thing I'd like to say is the budget crossed the $40 billion mark for the first time in 2022. Now, the trillions we basically hear deceives us. And it's only when you convert the budget to dollars that you start to see the realities of things, right? I want to go back to 2014. Let's just start from 2014. And why 2014? Because oil boom ended in 2013, right? But you look at a population of about 213 million people, and you only have a budget that hovered around average of $29 billion. Between 2014 and 2021. Now, how effective will that budget be? I'll give you an analogy. Let me use an analogy to explain it. You have a family of 5, father, mother, 3 kids, and they roll out a budget of about 20 million naira for the year, right? And then you have another family of a man who marries 3 wives, maybe 4, that's 4 of them. A man, 3 wives, and then they have 16 children. That means 20 in that household. And they roll out a budget of 2.5 million for the year. Now, how do you think the 2.5 million will be able to impact that?
So they have more people in that family.
Yeah, they have more people. So to be able to understand this, you need to also compare, right? When you do a trend or you do a comparative analysis, right, you start to see things clearer. What I did was to take the 3 largest economies in Africa, Nigeria, South Africa, and Egypt. And when you look at it, right, for instance, you have South Africa with less than 60 million people in 2021. And 2022-2023 budget was about $136.6 billion, right? And then you're looking at Nigeria with a population of about we're projected to hit about 215 million people by the end of 2022. It's rolling out a budget of 47, if you convert it to dollars, you're getting 47.15 billion US dollars using the exchange rate in the budget. So how effective will that be? And then break it down further. Of that 47.15 billion, only about 47% is projected revenue, which is about 22-point-something billion, less than 23 billion. The rest, 24-point-something billion, is going to be borrowed, increasing liabilities. Your assets are depleting. So, in a nutshell, I don't think that budget will impact the economy the way it should.
So, looking at it, right now, you did mention in dollar term,
Yes.
it's there's not been that much of an increase, with the budget. That's in dollar term. So we can say it's currency devaluation.
It's not just currency devaluation. See, yes, it's currency devaluation, right? Between 2014 and 2023, the budget increased in Naira value by 336.4%. But in dollar value, it only increased by 60.7%. Let's just say 61%, right? And then between 2014 and 2021, the budget in dollar value only increased by 8.7%. And your population is increasing. But meanwhile, what you also need to look at in the budget is the continuous liability, the increase in liability that is also increasing. Because as your liabilities increase, right, what happens is the little revenue you have, you're going to be using majority of it to service your debt.
Looking at the budgets now, holistically, we seem to always hit the expenditure target, but there's still that major issue with the revenue target. We hardly,
okay.
hit that. What does that tell us?
Okay. See, in 2021, I think 2021, SA, South Africa generated about $85 billion from IGR, right? 2022-2023 budget, they said the budget deficit was going to be about, I think, 30.6 billion, right? Now, that means that their revenue target is about 106 billion for a population that is less than 60 million. So what does that tell you? See, until we are able to mop up IGR, right, increase our IGR, we'll continue to struggle. That's the truth. Nigeria has got to look for a way, avenues in which IGR has to be increased. You understand? But at the end of the day, right, the question is, if I pay tax, right, is it going to the right use? If I pay tax, will it be used for roads? Will it be used for infrastructures? Will it be used for human capital development rather than funding the lifestyles of people? You understand? So when government also changes its lifestyle of living extravagantly, yes, people like me, people like you, to be honest, we're all guilty. Nobody pays the right taxes in this country. And that's because we've lost confidence, right, in the way in the way our funds are managed in this country. But when you see that whatever you pay taxes for are being used for the right cause, obviously you won't break a sweat to pay whatever you need to pay.
And we're already hearing the drum rolls of raising taxes, at this point. And looking at it, from your view, what other means? What other playbook? What else do they have in their playbook at this point to generate more revenue?
Well, part of what I see, right, the cash crunch right now, everybody's having to start using, apps to pay and all that stuff. So government...
And the apps are down.
Yeah, well, the apps are down because the infrastructures were not really there, right? But one good thing with this is that government will be able to track all the revenues you make. I'll give you an example. There was an article I read some time ago about someone who sells in traffic. And this guy says he makes about 20,000 Naira daily, average. So that's about 600,000 a month, right? Now, when you look at that, VAT is supposed to be, if you calculate 7.5% of that, right, that's about 45,000, which is lost in revenue to the government. So government needs to put infrastructures in place to also help limit lost revenues. You understand? But I like the idea. For the past 2 weeks now, I've not handled 1,000 Naira. I don't have 1,000 Naira. I get to the ATM and I see people. It's just
exactly same thing
I just
for me.
leave.
Once I see queues, I don't.
I leave.
I run.
Now, but the thing is this, right? I like what is going on, right? Because government is able to track all transactions, and if they are able to track all transactions, they can tell you, laddie, you know what? You're underpaying tax. What your tax revenue is supposed to be to the government is X, Y, Z. Do you understand? Well, if you don't believe, well, you can negotiate. You understand? But that will also help tax revenue go up.
Right.
Yes.
And talking about, the street hawkers, I was having a conversation with my friend, yesterday, and he did say he imagines the street hawkers will be going through a lot, right now, because not everybody will be willing to part with the cash they have, in traffic. So that's another economy that's going to be impacted by what's going on right now.
I think in the 80s, when we had a downturn in the economy, the head of state then said he did not know what was still keeping the country going. You understand? Now, I, for one, believe that the Nigerian economy is like twice the size of what it is. That's the truth. Now, there's a lot, the informal sector keeps the economy going. In the 80s, when the head of state then made that statement that the economy was supposed to have crashed, but he didn't know what was keeping it going, it's because we all concentrate so much effort on the formal sector. But the informal sector in this country is huge. Now, of the 3.23 trillion naira that the CBN said was supposed to be in circulation, right? Only about 500 billion they said was in circulation. So you can imagine, I play football every Saturday morning. Somebody from the north said, you know what, the closest bank to my village, of which a lot of the people there are farmers, right, is like from Ikeja to Ibadan. So you find a lot of these people putting funds, right, in the house. Okay, yes, it's going to impact the economy. But the thing is, government also needs to put all these infrastructures in place. If they put the infrastructures in place, then it can also portray what the size of the Nigerian economy is. Now, all these things that we're not putting in place is a big disadvantage to us. I'll give you an instance. If the economy is projected in the true light of what it's supposed to be, maybe 800 or 900 billion or even $1 trillion, do you know what that will do to our per capita income? Do you know what that will do to our poverty index? You understand? Do you know what that will do to attracting investors into the country? You understand? It's going to put us in a very good positive light on the indexes worldwide, which investors basically look at. But the informal sector is too large to be overlooked by the government. Yes, it will affect the guy selling on the road, but I think I like what is going on. Things need to be done right, and we need to start doing it right.
And at some point we might get to Kenya's level where we see, most of the street hawkers there, they do have, other payment portals.
The payment portal, I come to you, okay, how much have you sold? I can track your transactions through BVN. And I know that, well, you've made 1.5 million this month, you understand? And I know that I'm supposed to be, government is supposed to be entitled to 7.5% VAT. So all that will help government raise revenue. The 2023 budget, just about 22 billion is going to be raised through taxes and sales of crude oil. It's a drop of water in the bucket of what it's supposed to be.
And obviously, we've had that debate. They say we have a revenue problem. Some say it's a spending, issue. But let's look at spending now, government spending. What would you like to see, going forward? Very soon now we'll have a new CEO, the helm of affairs. What kind of spending would you like to see in Nigeria's budget?
See, from the 80s, right, our budget have always been budgets of liabilities. The budget, if you want to know if a country is going to get richer or is going to get poorer, right, just look at the budget. Use the concept of the balance sheet, where your net worth equals assets minus liabilities. What is the projected investments in the budget, and what are the projected liabilities in the budget? Let's go through some figures, right? South Africa, budget 136.6 billion, taxes 106 billion, budget deficit 30.6 billion, right? So if you use that concept, asset minus liability, they already have an asset of 106 billion, right? And a liability of 30.6 billion. So it gives them a return, a balance of 75.4 billion, right? Now, in that 75.4 billion, what is South Africa investing in? Education, 27.992 billion. Health, 16.379 billion. And then development and infrastructure, another 29.3 billion, which brings the total to about 73 billion. But let us look at that of Nigeria, right? You have a budget of 47.15 billion, projected revenue 22.32 billion, right? Budget deficit is 24.82 billion. That's 52 or 53% of the budget. Now, when you look at it, of the assets in here, right, which is supposed to be the projected revenue, which is supposed to be the asset, taxes and other sources, and then from oil. Oil that you drill every year is both an asset and liabilities. Why? I'll read something out to you, Ladi. It says, according to the World Bank, natural resources give rise to economic rents because they are not produced. Rent from non-renewable resources, fossil fuels and minerals, as well as rents from over-harvesting of forest, indicate the liquidation of a country's capital stock. When countries use such rents to support current consumption, rather than to invest in new capital to replace what is being used up, they are in effect borrowing against their future. So when you drill oil, right, and then you convert it to current asset, that is liquid cash, right, and then you spend, you're depleting part of your asset because your natural asset has also been estimated as part of your total asset as a country. You understand? So in effect, Nigeria, by the time we did the balance, right, net worth for the budget, we're going to have a negative figure of 6.91, about 7 billion US dollars. Now, what are we investing? We are investing just a peanut of that in education, health, and infrastructure. So basically, we are supposed to take from one asset. If you deplete your natural asset, you're supposed to invest in other assets to create more wealth, which is what South Africa is doing, and we are not doing.
But in a few seconds now, what kind of budget will make Nigeria richer?
Okay, see, South Africa, I think the budget per capita, let's go to budget per capita, right? The budget per capita,
because obviously,
okay, budget per capita. Yeah. South Africa is investing $2,300 per citizen or per person in the country. Egypt is investing $1,016 per person. Nigeria is only investing a meager $221, which will not impact the life of the average Nigerian. To get a budget that can impact us, right, we should be looking at least $1,000 per person, which will bring the budget to about 215 billion US dollars.
So that will mean more revenue.
Yeah, that will mean more revenue. Government needs to look for how to generate this revenue. Put infrastructures in place in the rural areas. There's a lot of informal sectors, right, generating billions and trillions in the rural areas that they do not even capture. Those people do not even pay taxes. So government needs to focus more on the informal sector to see how they can develop those sectors and raise IGRs.
Fantastic. All right, so we'll leave it there now. Obviously, a lot, to be done. And, when you look at the new CEOs that are trying to come in, it looks like there's a whole lot, for them to do with the Nigerian economy. But I'm sure we'll have to start somewhere and make it happen. Thank you so much for coming on the show today, Mr. Roman Oseghale, CEO IntelServe Inc. It was great having your perspective today.
Thank you very much.
Thank you. All right, so we'll take a break now. With all that's going on with the Naira swap, how's all of this impacting Nigeria's financial system and the banks? That's our next conversation. Do stay with us. Welcome back. Still watching Business Morning live on Channels Television. Now to our next conversation. 2023 definitely starting off rocky in Nigeria with the new Naira swap pressuring Nigeria's financial system. But how are the banks weathering this stress, coupled with the recent downgrade by Moody's to CAA1 from B3, the long-term deposit ratings, issuer ratings, as well as the senior unsecured debt ratings were applicable of 9 lenders? Let's discuss the expected impact on Nigeria's banking system now. Joining me now is Joshua Davisi, Sub-Saharan Africa Banks Research Analyst at Vetiva. Join us via Zoom. Great to have you on the show. Good morning.
Good morning. Thanks for having me.
So a lot going on right now. It's almost looking like some kind of, stress test, for the banks. But, in your view, how are you seeing the banks? How are they handling all of this?
Well, I think it's been a bit of a mixed bag. Obviously, you and your previous guests were discussing the fact that there have been quite a few challenges when it comes to things like digital banking and transactions, online transactions, which are seen as the logical alternative to cash and transactions of that nature. But the truth is that if we are to move towards a fully digital economy or fully digital banking system, the banks are going to need to step up their game and probably increase their capacity on the engineering side and on the bandwidth side, just because of the fact that the simple stress test of the last few days has proven that their bandwidth and their level of connectivity and the robustness of their platforms is not up to scratch. And I think that has been the case for a lot of customers who have been complaining about failed transactions or just not even being able to adequately utilize their online banking platforms. And that has been the case for the last few days, ever since this scramble for cash has come to light. That coupled with the fact that ATMs are not dispensing or were not dispensing the new notes and the withdrawal limits that were put in place, it's just creating a lot of bottlenecks for economic activity to happen. And I think that the banks really need to change their approach, or rather double down on their digital capacity.
But do you think, if the banks had more time, to plan for all of this, they would have fared better than this?
Absolutely. I think that obviously the short turnaround time for this policy can be blamed for a lot of the things that we're seeing. But the truth is that at the same time, I think that we've been hearing these indications or these overtures or this rhetoric from the CBN for quite some time, which is that they want to move towards, a cashless society, a more digital society, move transactions out of cash-heavy reliance into digital and USSD and things like that. But unfortunately, the banks have not been able to respond proactively to that. We've seen that there's been quite a, would I say, decline, or rather just a stagnation in terms of innovation from the traditional banks, especially your big 5 banks, when it comes to their online offerings and their online platforms, and how customers interact with those, and the level of the failure rate for that, and including POS transactions as well, is still too high for them to say that they've put in enough energy and adequately addressed that transition from a cash society into a digital society.
All right, let's look at the Moody's downgrade now from CAA1, from B3 to CAA1. Was Moody's right to, downgrade, these banks, just because of their exposure to the Nigerian sort of environment? Were they right to do this? Because some of these banks, some would say they have their parent companies abroad, and they've been able to manage the forex issues better. Were they right to downgrade them?
Well, the truth is that when we look at the international ratings agencies like Moody's and Fitch and the like, they always take a bit of a more skeptical, a bit of a more pessimistic view towards Nigeria and Nigerian banks, or even just African banks in general, whenever there are any kinds of uncertainties within their economies. I think that that's only natural because they are not on the ground in these countries, so they may not understand the full nuances of what is going on. I think that they are not surprising. The downgrades are not surprising, but would I put too much credence or too much stock in them? Not particularly, simply due to the fact that I think that we've seen things like this before, anytime there's a election coming up, there's a lot of uncertainty, but usually that clears up very quickly once the elections pass and the new government comes in and things like that. Hopefully, this transition will be as smooth as the last one, and we are able to get on with economic activities. Now, I think that there are a few different factors that may affect the overall stability of the banks, but those are very, very much bare cases, and I don't think that they are very likely in the near to medium term. So I understand the reasons for the downgrades, but I definitely do not agree with them.
All right, looking at your banking sector outlook for 2023, obviously it's starting off quite rocky for the first quarter. What other risks do you see coming up in 2023 for Nigeria's banking sector?
Well, just to qualify, actually, to start with, the truth is that these policies being put in place by CBN and the hike in MPR have actually been quite positive for the banks in terms of booking interest income. I mean, sure, interest expense has also gone up, which we've seen from some of the banks that have released unaudited Q4 results. But the truth is that with the higher MPR, they are probably going to book even more interest income. So core banking is still going to be quite solid. And the chances are, as long as inflation remains high, that we're going to probably see further rate hikes from the MPC, especially if the international community, your US or your EU, continue to hike rates as well. So that will continue to be a positive, and overall it has been a net positive for the banks on that front. But in terms of challenges, I think the biggest challenge currently facing the banks is really to do all with fuel subsidy. And what I mean by that is, if the government does go ahead to remove fuel subsidies like they say they will between April and June, then what we'll probably see is the ability of the CBN to defend the Naira will improve, because obviously FX receipts and the FX reserves would improve as well. And that would mean that we'll probably see a stronger Naira. Now, if that does not happen and the Naira continues to weaken on the official rate, on the official window, then that would be a pretty significant impact on NPLs, simply due to the fact that we would probably see the official rate, exchange rates, worsen from its current levels of about 440, 450, 460 levels. And it could get significantly worse if our FX receipts don't improve. And that is also tied to our crude oil production as well. So if those two things happen, then we're in for a pretty positive year. That is, if the fuel subsidy is removed and the downstream sector is deregulated, then we'll probably see stronger FX reserves and a stronger Naira. And then if crude oil production also improves. But if the reverse happens, then those are the biggest headwinds to the banking sector.
All right, what are you seeing coming for Nigeria bank stocks listed on the NGX for 2023?
Well, so 2022, first of all, was quite a mixed year, although the banks did show improvements, year-on-year growth in revenue and in profits, but investors were somewhat skeptical, especially international investors who had exited most of their positions in the bigger banks. But what we did see was that the tier 2 banks did perform quite well, specifically your Fidelities and your FCMBs. And I think that our expectation is that the tier 2 banks will continue to lead the way in terms of profitability growth this year. And so I would advise investors to keep a close eye on tier 2 banks, because they are showing a lot of ambition and they have a lot more of the drive to capture the retail market, with either it's with agency banking or with better digital platforms and digital offerings. And I think that they are best positioned to capture significant market share. So I would say look at the tier 2 banks like your FCMB, your Fidelity, even your Wemas and your Sterling. But the top 2 picks for us are FCMB and Fidelity.
And obviously, we've seen some of these stocks, rally in 2022. Is there still room for more growth there, or is it too late for some investors that didn't take position in those?
Well, what I would say is that it's not too late, simply due to the fact that the banks are still expected to continue growing their profits. So as long as that is the case, as long as the outlook for them is positive, I'd say that there's still quite significant upside. I would tell you that the 13% rally that we saw or we have seen so far from Fidelity is not the ceiling, because that stock still has a long way to go, especially if the management comes out with a very strong dividend announcement by the end of Q1. Then we'll probably see further rallies into much higher valuations from that front. So, and I still expect that to be the case for other tier 2 banks, just because the higher the dividend announcement, the more interest investors will show in those stocks. So there's definitely still a lot of headroom.
All right, thank you so much. We'll leave it there now. Thank you, Joshua Davisi, SSE Bank's research analyst at Vertiva. It was great having your perspective today. Thank you.
Thank you.
All right, now let's head on to the markets now. We have Anita Edet with the details. Anita, good morning. Happy New Week. And good morning, we did hear Joshua there saying that some of these banking stocks still have room to grow.
Yeah, I quite agree with him, because when you take a look at the banks always have the liquidity, and then at the equities market, it was one of the major contributors to the market's sustained bullish sentiment, along with the components from the industrial goods counter as well as the oil and gas counter. So with that being said, banks hold the money. All the other companies in the industries, they all go to the banks, and then of course charge on interest rates, and then of course
we all head to the banks.
Exactly, we will. You head to the bank today?
No, I am afraid of queues. I do not like queues. I'm allergic to queues, and
Okay, all right. So for now, before we start with the equities markets, let's do a quick rundown of the forex markets trading at the FMDQ exchange. At the spot market, it was up by 16.92%, and that was the primary driver for the 9.98% total increase in the forex market for the FX spot and the FX derivatives market. So it was what we recorded as at February the 3rd was $842.86 million, in contrast to what we had the previous week, which was $766.36 million week on week. But for the forex market, the forex end of the market and the futures end of the market, they were down by 23.3 and 2.13% accordingly. So that was how it turned out for that market. Now, also for the Nigeria Autonomous Foreign Exchange Fixing Rate, what you call the NAFEX, the Naira was slightly down by 0.002% at 461 Naira 35 kobo, in contrast to 461.34 recorded the previous week as at January the 27th. So that was how it was for that market. So we'll be talking to Senator Audu to give us an outlook for the fixed income market, an outlook, and as well as the review for the first week of February. Now, but let's take a look at the board there. 2.95%, that's how the market closed for the first trading week. That's the last 2 trading days of January and the first 3 trading days of February. So 2.95%, that's how the market gained. And then at the same time, in terms of value, 847 billion Naira. That was driven largely by investors, by the buying interest in MTN Nigeria, Seplat, and Geregu. So that drove the market. Year to date, we're up by 5.07%. Month to date, we're 1.8%. So the market is still very much in the green territory. And this is coming as many companies are releasing their corporate earnings results, which has begun to trickle in. And of course, it will be continuing this week. So let's take a look at the sectoral performance. Sectoral performance, as you can take a look at, as you can see on your board there, the banking sector was one of the major contributors, 2.49%, almost 2.5%. Oil and gas, wow, that was a massive rally there. 9.16%. That's major. Most of the components there drove that segment of the index there, of the NGX. Take a look at the industrial goods counter, 0.13%. As you can see, the lone loser there, which saw profit taking, was 0.42% from the consumer goods counter. So we had 55 gainers, 27 losers, while 75 equities were unchanged for last week. Now let's take a look at the activity chart. The activity chart was very much in the green. Volume, value, volume almost 400%. Value more than 100%, while deals was up by 30%. So now let's go to the fixed income markets, and then we'll be having our analyst to talk to us, Senator Audu, who is a fixed income dealer at Access Bank, to tell us more about the activities at the fixed income market last week. Thank you for joining us, Senator. Okay, so now it was
fixed income market last week. The key event was the bond auction that held on Monday. The DMO offered 360 billion across 4 bonds: the 2028s, the 2032s, the 2037s, and the 2049s. This auction was largely oversubscribed. The subscription was over 800 billion at 805 billion, with the DMO selling overallotting at that auction. The amount sold was 662 billion. So the stop rate, this issue was under a new calendar. So the stop rates for the auction came out at 14% for the 2028, 14.9% for the 32s, 15.8% for the 37s, and 15.9% for the 2049s. For this week, there isn't much happening on the bond side in terms of auctions, because the auctions are held once every month. We should see the auction for bonds coming next week. For bills, there are maturities. There is the OMO maturity tomorrow of 40 billion. And on Wednesday, there is the NTB auction for the maturity coming in on Thursday. The maturity coming in on Thursday for NTB is about 217 billion. And there will be an auction for that on Wednesday for the same amount. With regards to stop rates, we saw the 1-year NTB close at 4.78% at the last auction, a significant reduction from the 7.3% levels that had come up at the preceding auction. So with regards to those stop rates, we do foresee a further decline in rates, largely because the rates in the secondary market are on the low side. We're seeing trades under the 3% levels. We're also seeing liquidity coming from the CBN's drive to on the back of the currency redesign. So we're seeing lots of cash coming into the system. So the combination of a liquid market and the appetite for market players in the secondary market should lead to a downward trend in the rates in the secondary market, as well as the private market auction on Wednesday.
Okay, so Senator, one more question before I let you go. In about a week from now, we will be expecting the January inflation report to be released by the National Bureau of Statistics. Earlier this month, we had the December inflation, which pointed out to a decline. And then we also had the Central Bank of Nigeria raising interest rates. So now what's your outlook, and how is this expected to affect investors' sentiment, as well as the yields across the fixed income market, the treasury bills, and the bond markets?
Okay, as the CBN governor explained at the last MPC meeting, which was last month, he explained that although we saw a bit of a reversal or a moderation in the inflation figures, the MPC is not necessarily in a celebratory mode. They emphasized caution as the market players go about their activities, considering that we're having certain economic factors that point to rising prices. We're having the surging energy prices. We're seeing food prices take the same path. So market players are taking those inflation figures into consideration, but with a lot of caution. And we've seen a lot of that caution priced into asset prices. So on the fixed income side, we don't expect any serious reaction to those inflation figures coming out next week. A lot of analysts are split. Many of the analysts are foreseeing rates remaining largely around where they closed at the last inflation figures. But we don't expect any significantly large reaction to those inflation figures, as many of those projections have already been priced in.
Oh, okay. Thank you so much, Senator. Of course, our eyes are always on the market to see which side of the pendulum it swings. So that was our analyst, Senator Audu, giving us an out.
And we definitely don't want to see an uptick in inflation for January, because we know what that means. They're going to go more aggressive, talking about the MPC.
Yeah, but Ladi, I don't think you can escape an inflation, particularly this month. For the month of January, we saw lots of the impact of this Naira, the fuel, and so many. I'll be surprised if it goes down.
PMS. I'll be surprised.
I'll be very surprised.
Let me be honest with you. Thank you so much, Anita. We're looking out for the close today for the equities market. All right, that was Anita there giving us the details for the fixed income market and the equities market. Let's move on to other markets now. Let's see what's happening with Bitcoin. We saw quite a rough weekend with Bitcoin there, losing that 24,000 level it hit, getting farther away from that level. But we still have greed in this market, 56 points. Still shows that, investors are still quite bullish in the market right now, even though we saw that pullback over the weekend. Let's look at the market cap today, $1.06 trillion. That's down about 2.54% with the sell-offs we saw over the weekend. We see volume traded, that's up 31.07%, $50.36 billion. And we see Bitcoin dominance still hovering around that 42%. Let's look at the price of Bitcoin, $22,805, farther away from that 24K level hit last time. It's down 2.60%. We're seeing profit taking in the market now. Or could it be a sign of things to come in this market? Who knows? Volume traded, $20.73 billion. Let's look at the price of Ethereum. That's holding up that 1.6 levels, a psychological level there. Down 2.51%, $7.14 billion. That's what traded in Ethereum. Let's look at top alts by market cap. See, it's all red as expected. Matic there, it's had an incredible run in January. It's down 4.44%. We see BNB still holding that $300 level, but that's down 2.45%. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Good morning.
Hello, Ladi. Good morning.
Good morning, Olumide. So it's quite a rough weekend for the crypto market, and we saw Bitcoin, it touched 24, but couldn't really maintain that level. Is this profit taking or just telling us what's going to happen next in February?
Yeah, I think it's a mix-up of profit-taking and the rally we're seeing in the US dollar. If you recall, on Friday, the world's most powerful economy brought in an amazing employment number report, and that really broke the bulls because that meant that the Fed had a lot of room to increase interest rate hike. And it still tells you that the labor market in the United States is tight. So we saw risk of asset, particularly stocks and the crypto assets dwindling down. And that was why Bitcoin could not maintain above the $24,000 mark. So right now, what we're seeing is that oscillation between 22,800 and the 23,000 mark, telling you that profit taking is in play. But interesting signs, it's still pretty too early to call whether the US Fed might keep on accelerating interest rates because they're expecting the CPI, inflation US data. Any uptick on that might mean that the US Fed might be more aggressive. Any downside might mean that the US Fed might be more relaxed. But having said all these things, the US dollar is rallying against major currencies, and the digital assets are not in any exception. And that's why we're seeing moderation across the crypto space, Lad.
Yeah, the inverse relationship between the dollar and most risk assets still hovering strong in this market. But any other market moving data we were expecting for this week?
Yeah, apart from the inflation data, we're expecting an earnings report from a number of companies that have exposure in the crypto market. So that also weighing the market relatively. But I think one interesting sign is that back home, data shows that Lagos is among the top crypto hubs in the world. It's in 14th place, while London shares the top spot. And that just tells you that after this election season, maybe fiscal policy makers in Nigeria will take the crypto market more serious because it tells you the dynamics of the crypto market and how positive it can help in job creation and boosting the alien economy in Africa.
Talking about job creation in the crypto space, it seems like you have more jobs in a bullish market and less jobs and layoffs once the bear appears.
Yeah, that's direct. That's if you look at it on the direct line, we're talking of entities that have exposure in the crypto market. But don't forget that a lot of Africans, particularly Nigerians, have crypto exposure. There's a recent data by a trading browser that shows that 90 million Nigerians have exposure in the crypto market, and many of them use it for transactions. Some of them use it for wealth preservation, speculation, and for payments. So it tells you that indirect employment coming from that market also is oscillating high, and that's why Nigeria still remains the only country in the world that has a perfect score in interest of blockchain.
Quite interesting. Thank you so much, Lumide Additional, financial market analyst. Thank you.
Thank you for having me.
All right, let's look at the top gainers for today. See, AGIX is topping the counter, up 27.07%. DYDX had a good run, still moving, up 3% this morning. So we're seeing lean gains this morning. Let's look at the top losers counter. We're seeing a lot of pullback with the crypto space, with altcoins. Obviously, once Bitcoin reacts, we know the altcoins start to move downward. If we look at the top 5 losers there, we see it's Doge, the meme king, topping that counter, down 11.73%. We know investors expecting some kind of meme coin season, but it looks like that's not playing out as expected. Lido DAO, that's down 8.23%. And we see also Shiba Inu there, that's down by 8.61% and much lower than price that we have there. All right, that's it for the crypto market today, and that's it on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch all of this again and all our other productions on our YouTube channel. Just flip to YouTube, search for Channels Television, check out videos, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.